Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Charles Dobens. Thanks for being on the show, Charles.
Thank you for having me, Whitney. It's a pleasure.
Charles is a principal at Dobens Law and founder of the Multifamily Investing Academy. A successful attorney and consultant to multifamily investors all over the country, Charles Dobens has personally acquired over $20 million of apartments and been involved on behalf of his clients in over $3 billion in multifamily transactions. Well, thanks again, Charles, for being on the show, and give our listeners a little more about your background, what you do, how you got into this business.
All right. Well, I love this business. I am having so much fun. What happened was I started off in actually the insurance business many years ago, and then went to law school and ended up owning an insurance firm, and absolutely hated it. Hated every minute of it. As I tell people, I said, if you have a kid that is graduating from college and their goal is to get in the insurance business, there's something very wrong with that child. There's something very wrong. And you as a parent have done something, terribly wrong. But I did that and got to be about, as I tell people, havoc struck. I turned 40 and I looked at my life and I said, I am miserable. I hate what I do. I don't want to do it. My wife said, what do you want to do? I said, I've always wanted to own apartments. And so we sold the insurance business, and then I went out and started buying property and, made every mistake in the book. Bought some great properties, bought some real doozies, and then, the market crashed, and, ended up keeping some of them, losing some of them, just going through the whole process that everybody at that time did. And, a lot of my friends who own apartments came to me and said, hey, I'm getting, whacked by the banks, and, can you represent me through the process? And I said, sure. I'll, see what I can do. And then, I'll tell you something. When you're in that situation, you're just holding the guy's hand as he just continues to crash and burn. There's not much that you can do. But what happened was I started looking at these deals that these guys had done. And I said, why did you do this? This deal's not a very good deal. And he said, oh, no, it's great. We would have done these things. I realized that these gurus out there are teaching people the wrong way to own multifamily property or even to acquire property. And I said, I am better off protecting people at the beginning of the process than at the end. So that's when I started the Multifamily Investing Academy. And, the whole mantra is to teach you how to buy multifamily property the right way, because I've done it every way possible and I, many, many wrong ways. And I don't want to see you making the same mistakes I've made. So that's how I came about. And what ended up happening is all my students are all over the country. And, I'm only licensed to practice law in Massachusetts. So I have to be very careful of what's called the unlicensed practice of law. So I tell all my students, I'm a lawyer. I'm not your lawyer. You're going to hire a lawyer. But I still act and feel like an attorney, but I consult them through every aspect, how to find the deals, how to analyze the deals, how to get them under contract, make offers, do the purchase and sale contract, take it through transition to ownership and syndicate the deal, and how to, go about putting the package together to raise the private money. That's what I do. My students I have some of the most phenomenal students in the whole country. And I love what I do. I actually, from going from the insurance business Whitney, I asked this question when I spoke in Nashville just this past weekend, and this is a question I ask, and everybody nods their head. They know what I'm talking about. I said, how many people in their occupation hate Sunday nights? And so many people start nodding their head like, oh, they know what I mean. I hated Sunday nights. I hated going to the office. I owned the company, and I thought, I got 35 people working for me. They must all hate to work here too. And Sunday night, because I knew Monday morning I was going in to get my head bashed in. And that was what it was like back in the insurance business. I love what I do now. I love helping my students. I love getting involved in deals all the time. It's a blast. I hung the moon with the Multifamily Investing Academy.
Nice.
So,
I liked how you talked about protecting people in the beginning instead of at the end.
Yeah. I mean, I can't help you at the end. I can't help you. And so many of my students say like the best advice you ever gave me was not to get into a particular deal. And listen, that happens a lot. That happens a lot because people get in this business and think, oh, I'm just going to buy this. I'll buy that. I'll buy that. No, you don't understand that owning multifamily property changes your life.
Yeah.
And you better understand what that property is going to do to you. Because I say, if you buy the first one wrong, you'll never buy another one. And you'll never get to 1,000 apartments if you don't buy more than one. So
I can appreciate that. It's going to change your life, good or bad. Right?
Yeah, exactly. And you better be aware and you better be ready. So
what is it about multifamily? Why not some other asset class?
Oh my gosh, I love multifamily. There are 5 ways to make money in multifamily. And I teach this. And as I teach it, I say, okay, think about this business and all the ways you can make money in this business, and then compare it to going out and buying a Subway franchise and see the difference between the two. And that's how I taught it. And when I was teaching in Boston a couple of weeks ago, a month or so ago, this couple came up to me afterwards. You know what? I just got to tell you, when you said compare it to a Subway franchise, we totally understood what you were talking about because we own a Subway franchise. Like, oh, geez, I hope I didn't say anything wrong. I said, no, you were spot on. Yeah, I mean, that's exactly right. I mean, a Subway franchise, how do you make money? You gotta make a profit on each sandwich you sell. With multifamily, you've got the profit every month, which is the positive cash flow. You've got acquisition fees and disposition fees if you're doing a syndication. You've got mortgage pay down. You've got property management fees, which is key. And that's something that I teach all my students, that you will own your own property management company. And then finally, you've got forced appreciation. Like if you just the power of the cap rate, if you drive that price, that NOI up by $1, if you increase the NOI by $1 on a 4 cap property, you have just increased your net worth by $25. That is how powerful multifamily is. And that's just one of the 5 aspects, 5 ways of making money in multifamily. That's why multifamily is so powerful in my estimation.
So a student comes to you and says, I want to get started in this business, Charles. You know what? I have no clue what to do, or maybe I've owned a single family home or two, but I want to scale. What do you tell them?
Okay, well, I tell them that, listen, this is not a get-rich-quick scheme. You're building a business. It's going to take time. You got to be committed to doing it, and you're going to start out slow. The hook of my class is called "How to Own 1,000 Apartments in 5 Years," and people are like, "Oh, I want to own 1,000 apartments." Yeah, absolutely. Okay, then all I ask you to do in the first year is own 20. Just buy 20. That's it. Let's buy 20 and let's build this business on a solid foundation. And as you know, all you do every year is double what you own and don't sell anything. So 20 the first year translates into 60 the second year, 180, 540, and in 5 years you'll own over 1,000. And it really is as simple as that. And I have several students who in the last 3 years are now up to over 1,000 apartment units. So it's a nice format. But the thing is, you got to understand, this is a sales and marketing business. And this is where I lose people. I mean, if you think you're going to come in here and just buy, that doesn't work that way. The worst thing you can possibly do is overpay for a multifamily property. So you got to go out there and find the deals. There's another guru out there whose name shall remain nameless, but he says it's okay to overpay for multifamily property because the value of the property just continues to go up. When I heard one of my students tell me that they came from that guy's seminar and that's what he said, I thought to myself, this guy must be 8 years old, because he obviously wasn't around during the last crash, because I can show him properties that did not come back in value after the last crash. So you cannot overpay for your property. You've got to be smart about acquisitions.
So why don't you help us to not overpay? Let's focus on that for a minute. What are some things you can help us to focus on so we do not get caught up in that?
Okay, so understand multifamily is all driven by a formula. It's the price equals the cap rate divided by the price equals the net operating income divided by the cap rate. Okay, the cap rate is set by the market. You, as an investor, had better know your cap rates for the market you're buying in, or they will run roughshod over you all day long. So let's assume in this analysis that you know your cap rate. So then the only variable that you got to be careful with is the net operating income. That's the number that they're going to screw you on. And you have to be able to go in there and look at a guy's net operating income and say, nah, I'm not buying it. No, you can't do this. And I teach my students all the tricks, all the rules of thumb, so that they can look at a trailing 12 financial statement and know right away what a day in the life of the property manager that runs that property is like, just by looking at the numbers. It's all about the numbers. So it's the NOI. That's where, as I use the the boogeyman in my class that helps everybody understand, how you can get screwed and how you need to protect yourself. The boogeyman is a guy by the name of Daddy Warbucks. And all of my students know Daddy Warbucks, and they have me talk about it all the time. There's a reason why Daddy Warbucks is rich, because he knows how to take your money, and you've got to protect yourself against Daddy Warbucks.
So could you dig a little deeper about, helping protect ourselves and making sure we have the correct NOI? What are some of the biggest issues you see?
Okay. So one of the things is, understand that if let me see if I can give you some tricks. Okay. You always want to get a trailing 12 financial. You want to see the financials of the property over the last 12 months. The banks are okay with 3 months. Okay. But the banks aren't your friends with some of their underwriting guidelines. The banks, hey, they'll take the property back if you screw up. But you need to see the property in all 12 months, because you need to see if there have been any spikes in the income. Because if there have been spikes in the income, the guy's probably, loading up bad tenants to get them to pay and make the rent roll look really strong so that you will buy the property. But the way that they load up those tenants is with really bad customers, like felons, sex offenders, people who only buy if there's a concession, and all these different types of tricks that sellers use to make their babies look better. The other thing too is, how can a property manager, how can an owner reduce his expenses quickly over a 3-month period? Very simple. He just stops paying his bills. And one of the biggest bills that you tend to see stopped right away is pest control. And if you look in the trailing 12 financials and you don't see the guy spending anything for pest control, don't believe him when he says, oh, well, this property has no pest issues. I have gone through over 3,500 apartment units. There hasn't been one of them that doesn't have a pest problem. So that they cut off their expenses that they're not going to pay. And the other thing too is they cut back on the repairs and maintenance. And when they cut back on the repairs and maintenance, that doesn't mean that they don't have any repairs and maintenance. That just means that you're going to be doing the repairs and maintenance when you own the property. So these are just a couple of things that we talk about, to protect yourself.
So what, maybe when a student has been doing, or going through the process of purchasing a property and they're analyzing that trailing 12, what are some mistakes you see? I know maybe they missed that the expenses, went down, or the income obviously went up, spiked at some point, supposedly, right? What are some other things that students, if you haven't looked at too many trailing 12s, that you wouldn't know to look at?
Okay. So what I do is I make it easy for people by using expense ratios. So when you look at a ratio on that trailing 12 financial, it'll peg what type of property is. So if you give me a multifamily financial statement and you tell me that the expense ratio is 35%, well, let me tell you something. That had better be a Class A property in a low cost area. And if it's a C-class property, I'll tell you right now, there is no possible way you can own and operate a C-class property at a 35% expense ratio. Those financials are made up. They're from Never Land. So don't, that is the quickest way, depending upon the type of property it is, will tell you what expense ratio you need to use. And then the other one that people get into mistake about is trying to drive what we call a value play, which is where, hey, what is it about this property that I should take advantage of and increase the NOI using that? One of the biggest ones you hear people coming out of these boot camps always talk about is, oh, I want to buy a C-class property in a B area or a B-class property in an A area. Oh my gosh, guys, listen, if you have never been to Fort Worth, Texas, and you pick up the phone and you call a Fort Worth broker and you tell them, hey, I'd like to buy a C-class property in a B area. You've never had a conversation with this guy before in your life. And you're saying, hey, I'd like to buy a C and a B. Here's how the conversation goes on the other end. The guy goes, I got another one. Watch this. He's like, yeah, sure. That's exactly what we've got. I've got a perfect property for you. And you just think, because, well, he's not lying to me. I'll go down and I'll buy this C-class property in the B area and I'll make tons of money. You have to know your market. You have to know these guys will sell you a bill of goods all day long, but you have to be educated as an investor and know exactly what you're doing. So, that's one of the ways that these guys do it. Another value play that people make huge mistakes on is, and I could get more into the what that's called repositioning, where you're changing the letter grade of the property. I could tell you more stories about that, but the other one is okay, this one. It's an all bills paid property. Okay, that means that the landlord pays the utilities. All right. I've made that mistake in my life. I will never make that mistake again. Whenever your tenant and the utility companies are in cahoots with each other against you, you will lose every step of the way. So be very careful when you're buying an all bills paid property. The second thing you got to be careful about is if your investment strategy is to convert that all bills paid to a tenant paid property, so that you put in like a RUBS system, or you put in some type of a metering so that you can push off the utilities onto the tenant, and that'll really, drive your NOI. Here's where that fails. What is going on in your market? There was one guy that was trying to do this on a property in Lexington, Kentucky, and what we found out was that he's on a street with 1,300 other apartment complexes. All the rest of them are all bills paid. C-class tenants only buy all bills paid. They do not buy, tenant paid utilities, because they don't have the credit to get the utilities put up in their name. So they only look for all bills paid properties. So you own your property on a street with 1,300 other competitive apartment units on there, and you decide you're going to tell your tenants, hey, we're going to switch to a tenant paid. You're going to start paying for your utilities now. Overnight, your property will vacate. They will move out of your property across the street to another guy who's got an all bills paid property, and your investment strategy will have failed. Absolutely failed. So those are a couple of the things that you need to look out for. Boy, I sound like such a downer, don't I, Whitney? You really ask me all these questions. Why you ask me what I do for fun? Jeez.
We don't care about what you do for fun. No,
thanks a lot. Really, I appreciate that. Thanks, Whitney.
So the student comes and talks to you, and says, I don't know what market to pick, and I, with the way things are right now, quote, I hear that all the time. The way things are right now, how do you guide them? How do you tell them how to pick a market right now? And in the cycle that we're in, I hear that all the time.
Yeah. Well, first off,
conversation looks like.
Okay, the conversation goes like this. I said, first off, stay out of the primary markets. And even some of the secondary markets, like Nashville. I'm starting to call Nashville a primary market. Stay out of those markets because you're just not going to compete against the big boys. You're not going to compete against the foreign money. So just stay out of those markets. Focus on your own backyard and focus on markets that are secondary and tertiary markets. I love telling the story about this. I'm not going to use their names. Excuse me. But there were three brothers and a father, and they lived out in the western part of the country, and they couldn't afford the area that they were in, and they really wanted to get the multifamily. So they searched the market and the whole country, and they found Kansas City. And they said, we're going to move to Kansas City, and we're going to build a business there. They moved to Kansas City. Kansas City is too rich for them. So they start buying outside in the tertiary markets outside Kansas City. Those guys currently have over 100 employees, and I've heard they've got close to 3,000 apartment units now, just by starting out small in those tertiary markets. That's how you build this business. So you can really do it anywhere. You can find deals anywhere. People are always dying. People are always getting divorced. Partnerships are breaking up. You've just got to make sure that you as a business person are out there marketing all the time, and letting people know that you will buy their multifamily property when it becomes available. So that is how you do it. This whole concept of, you got to buy in an emerging market and that's how you do it. Well, listen, the guys who are my heroes growing up, built their business right here in Nashua, New Hampshire. And they're now multi-millionaires, and they did it all right here in Nashua. And nobody would have told them years ago that this was an emerging market. So you can find deals anywhere you look.
So just quickly define what a tertiary market is, in case the listeners never heard that term before. I've heard people mention it on here often, but we haven't really explained what that is.
All right. So the way I describe it is because, I'm sorry, Whitney, I'm going to have to tell you what I like to do for fun. I like to fly. I'm a pilot, so I love flying. So I liken the primary, secondary, and tertiary markets to airfields, okay? A primary market is a market that has an international airport, okay? A secondary market is a market that has a regional airport. And a tertiary market is a market that has a non-towered field. Pilots are just talking to themselves as they circle the field, okay? So that's the way I break it down, so it's very easy to understand what primary, secondary, and tertiary are. Now, here's the thing. The issue with tertiary markets is it's tough to get investment dollars in, and it's tough to get investment dollars out. Mm-hmm. So you have to have a really strong deal in that marketplace and have a very good story to tell to get people to invest in your deal in those tertiary markets. So that's one of the objections and walls that you need to get over. So I was going to say border walls, but I suppose I shouldn't date this podcast as to what's going on right now, right? So,
no, I appreciate you breaking that down like that. That kind of helps, people to think about that when they're looking at different markets and how large it is. So, what's been the hardest part of the syndication business for you?
Well, I guess the easiest answer to give you is timing. And what I mean is when you do a deal and you get a deal under contract and then you've got to go out there and raise the money, when you're under a purchase and sale contract and you are doing a one-off deal, you've got a gun to your head. You've got to hustle. I've got several students in that boat right now where they've got to get out there and they've got to hustle to raise the private money to complete the syndication. So that has always been, but at the same time, I've watched students make the same mistakes that I've made, which is where you get into a partnership where one partner's responsibility is to go out and raise the private money. And they go out there and they, I'm going to do this, I'll go with this. And they get the same percentage ownership that you do, and you have to run the property year in and year out. Those people, what they don't understand, the new investors don't understand, is that out of the whole job descriptions and all the people involved, the guy who raises the private money has the easiest job because at the end of 60 days, he's done. He walks away and he gets the same equity that you do. And you've got to run, you've got to wake up at night, you got to burp that baby, you got to change the diaper for the next, 7 years. And that guy got the same payday you did. So keep that in mind when you're thinking about doing syndication and, raising private money.
What's the number one way that you've recently improved your business that we can all apply to ours?
Marketing. And, listen, I'm going to interview a guy tonight who has, and I'm not going to mention any names, but he's on every Monday night I do a coaching call with all my students, and this guy's going to be on. And he went out and raised private money by building a podcast, by building a tribe, if you will, of people, and they just want to invest with him. So now he can turn around. He's always got the capital to go out there and do the deal. So that guy put the cart before the horse. So many people that go out there looking for deals, and they never even talk about money until they have a deal. This guy went out and built his whole entire network first so that he could go do deals whenever he wanted to. I think that's genius. I think that's absolutely genius. And it's all about marketing. It's all about marketing. Every business is all about marketing. What's the oldest profession in the world, Whitney?
I've heard this.
Oh my gosh. Guys like you have to Google everything, right? The oldest profession in the world, everybody used to think was prostitution. But the thing is, she had to sell her services first. It's all sales and marketing. Sales and marketing is the oldest profession in the world, and we still have to do it every day.
What's a way that you've bettered your marketing recently?
I'm rolling out my podcast. I've built funnels that, I've hired people for a lot of money to build funnels to put them into my system so that I can keep them live and action, keep the action going on my database. So I've really automated my systems so that and it's working because people are contacting me that people are signing up for my program. People are talking to me about money for their deals that I can't get over how many people are beating down my door because I've built the system to do the marketing.
What's the number one thing that's contributed to your success in this business?
Oh man. I'll tell you what it is. It's my father who passed away about 3 years ago. But before he passed away, I was really, trying to figure out this coaching, consulting business and the way that people do it, the model that people use in this real estate space is all wrong in my estimation. They charge people $25,000, $50,000 for a coaching program, and that's just absolutely ridiculous. And they don't have an opportunity to speak to the guy who at the top who sold them on the class. I sat down with my dad. My dad was one of the most successful insurance agents in New Hampshire here. And when he died, he had over 3,000 students, 3,000 clients that loved him. And when the phone rang, my dad answered the phone, and he took care of his clients. So what my dad taught me, I've parlayed into this business, and it has just been an absolute blast. I every day I look forward to it. I love dealing with my clients. So it's I answer my own phone because I want to make sure my clients get taken care of.
What's a way that you give back?
So there is an organization here in Southern New Hampshire that I'm very much involved with. It's the Home Health and Hospice Care. Started back when my mother passed away, and they just what they did. They were angels on earth, and so now I'm involved with them. Actually, they've just asked me to be on their board, and I do a live auction every year here in New Hampshire. Made $150,000 last year for them, and it's a ladies' champagne luncheon, and I get to act like Don Rickles in front of 300 women, and they think I'm a riot. And it's like, if only they knew, some of the stuff that I have to put the filter on that I'd like to say. And look, at a guy like you, Whitney, probably has to go Google Don Rickles, right? Yeah, you do.
Right.
You're gonna have to, as soon as we hang up, I know you are. Fine. He is. Folks, listen to this. Can you believe this? This guy doesn't know who Don Rickles is. He's going to have to Google Don Rickles.
I don't know who it is.
Oh, man.
So what's a need that you have in your business right now that you'd like to put out to the listeners?
Oh, a need. Geez, I don't want to disclose it right now because I'd be inundated. And it kind of has to do with adding to my staff. I just added an accountability component to my program. Prior to that, all I did was handle the transactions for my students. And at the end of last year, I put out a note to all my students. I said, hey, I want to make the owner forum even better than it is now. What do I need? And the feedback I got was that we need to have more of an accountability component. So I've hired an accountability coach so that he keeps the person on track. And every 3 months, we do an action follow-up on the annual action plan to make sure that the student is doing exactly what they need to be doing in order to get their job done. And so that is really the newest thing that we've done. And that's, it's just taken off, and people are signing up to work with me just because of that action plan. And as a result, I'm probably going to need more staffing to keep it going. So it's going to be fun. It's
Nice.
great. I love it.
Good problem to have.
Yeah, no kidding.
So tell the listeners, how they can get in touch with you and learn more about your academy and business.
Yeah, so just come on to www.multifamilyinvestingacademy.com or themultifamilyattorney.com. And I've got everything there on the website. You can just click on it. You can contact me via the website or contact my assistant, Deb. And, you learn all about my different programs and courses and what have you. But my big program is my one-on-one coaching, which is called the Owner Forum. And another nice thing, we talked about, setting up that tribe. Everyone in my program, there's over 100 students, everyone in my program has direct contact with everyone else. Everyone's on WhatsApp. Every Monday night, we all come on a live call, video call, just like this one. And it's just been I've built up a tribe that people come in and this can be a lonely business. I mean, you think of these people looking to buy apartment complexes, and not everyone in their family or their friends understand that or want to do that. They're out there on their own. And so what we do in the owners forum is everybody is in on it with everybody else. And it's a nice tribe to be in. I love it. Great group of people. Yeah.
Thank you so much, Charles. You've been a great guest and provided tons of content.
Thanks, man. I appreciate it.
I hope the listeners will connect with Charles and go to his website and check out his Multifamily Investing Academy. Also hope you'll go to LifeBridge Capital and connect with me and schedule a call, and also go to our Facebook group so we can all learn from experts like Charles and grow our business together. Have a great day, and we will talk to each of you tomorrow.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.